Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we run on the channel. Now, if you don't know what selling puts is, guys, it's a very easy strategy to run, whether you're a beginner, intermediate, or even advanced investor. The strategy is very simply as follows. You can think of selling puts as a buy limit order that pays you. Let me explain. Let's say we want to buy Chipotle stock right here in this beautiful area of support around the $50 mark. Well, you can always buy Chipotle stock with 2 different ways if you're looking to buy under the market right now. Let's say you wanted to buy it at $50. Well, you can always set a buy limit order down there, but the problem with that is that if ever the market runs away, you don't get filled and you don't get compensated with anything at all. That is where selling puts comes in. You can actually sell a put at the $50 strike, and if ever the market does come down into that location, you will end up buying the shares, but you will also be compensated for your time. Take a look at the Chipotle options chain right here, and you can see that these puts on the $50 strike are going for anywhere between $20 to $25 each. So it's very easy, guys. In the event that the stock does not get below $50 by the given week, by the given Friday end, you will just simply collect all of that $20 to $25. And if the stock does come down into that price and assigns you, well, you'll have to buy those 100 shares that you were looking to pick up anyways, but at least you will also gain the premium $20 to $25. It's a very easy strategy to run here, guys. And usually all the plays that I give on the channel are almost all winners. We have a 90 to 95% success rate with all of these trades. So in today's video, guys, very simply, we are going to go over these strategy rules to begin with very briefly. Number 2, we're going to go over the top 5 options plays of last week, see how those performed, and then concluding with the top 5 options plays of this week. And as usual, I have a ton of bonus plays for you guys as well. Just keep in mind, if you want to skip to any portion of the video, if you already know the strategy and you already know last week's top 5 options plays, just feel free to jump to the section that you want down below in the description. So let's move right into it, guys. And before we get into the rules, let's go over a little bit of the market expectancy for this week, right? So we know we've had a phenomenal rally on the SPYs and the QQQs over the last roughly 10 days of trading. But I would be very cautious in chasing the market right here, guys. Usually when we have 9-10 days of back-to-back rally, we are due for a potential pullback. And that is what we're possibly expecting in the early 2-3 days of the week before possibly resuming that rally later on. But we are not going to chase the markets up here, guys. We are going to be wanting to watch for dips to get some great entry opportunities. That being said, in terms of our catalysts for this week, well, you'll see that we have a few Fed members speaking on the Monday or Tuesday events. Those shouldn't be really market moving at all. Neither will the FOMC minutes on the Wednesday session. The real market moving events, guys, come on the Thursday session where we get manufacturing PMI. That is one of the reports just a few short weeks ago that sent us downwards on a Thursday session as well. And then we also have the Jackson Hole Symposium. This is where Jerome Powell will be speaking as well with other members of central banks, and usually can be a very volatile event, especially if he makes certain comments on the economy and the direction of inflation and interest rates as well. So most of your news headlines will come in the tail part of the week. Also keep in mind, guys, we do have a lot of earnings this week, but no real major companies that stand to be able to move the market off of their earnings reports alone. Those are largely behind us. But we still have a few interesting names. Palo Alto coming out tomorrow after the close. Then on Tuesday, we have Lowe's, Toll Brothers, a few of your home builders right there. Wednesday is going to be a big day. We get Target, Macy's, TJX, great insights into the consumer. And then after the close, we have a big one, which is going to be Snowflake, and then a few more wrapping up the end of the week. But a very light earnings week, to say the least, especially in comparison with our 2-3 weeks prior. So without further ado, guys, let's jump right into the strategy rules for the most part. And we're going to be going over these quickly since most of you guys know them already. If you want to see a longer description of these rules, I have a 30-minute video on this topic as a whole, how I choose my strikes, how I choose my stocks, and just a overall more in-depth detailed description of the strategy. I'll leave that video in the top right-hand corner of the video right now, and also down below in the description. But the rules are as follows, guys. We're going to jump through these fairly quickly. So number 1, always write puts on a solid company. high conviction plays for you only, guys, right? This is rule number one for a reason. You do not want to get assigned a stock that you do not want to own at that strike price, especially if it's not a high conviction trade, because then if the position starts moving against you, you will start wondering why you're even in the trade to begin with and may even have to close it at a loss. So please, 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 solid high conviction companies for you only. Number two, we want to be looking for companies in a monthly uptrend or at least in a long-term range. Monthly uptrend looks something like the SPY, right? So you want to find something in a monthly uptrend or somewhat of a long-term consolidation range. That way we have some better levels to base our trades off of, and we know that our long-term bulls are going to support the price levels at which we trade. Number three, no earnings this week, guys. If you want to stay away from extreme volatility, just do not ever write any put options on a stock that has earnings this week. Earnings can be a very volatile event. It can go up 10%, it can go down 20%. The last thing you want to happen is to get caught with an unexpected earnings move to the downside and end up with a wider loss. So please do not do this if you want to be conservative and run the strategy properly. Number four, we want to be looking for stocks in a support area or an area of breakout retest. Support area, very simply, we can look at Autodesk right here. Huge baseline of support down here in the lower $200 level. This is 2 years worth of support, guys. Usually a strong level to be basing our short put trades off of. The breakout retest trade is once we break the top end of a range of consolidation, usually you get a breakout of the range, a retest of the range, and then run. This retest area is usually a very high probability trade for some trend expansion thereafter. So those are just a few of the setups that we're going to be looking for. All of the setups that I show on the channel will respect one of these two criteria. Now, these 2 points next go hand in hand. We want to be writing at or lower than the expected move. If you guys don't know what the expected move of a stock is in a given week, you can go to this website right here, optionsai.com. It gives you the expected move for every single stock in a given week. Here we can see Chipotle has an expected move of about 3.5%, and the lower end at the bottom here of the expected move is about 50.64. We want to be writing our puts below this level, guys, because usually when we start cracking below a weekly expected move, we can expect some mean reversion. So the trick in this strategy, guys, is writing at or below the expected move to benefit from some of that mean reversion if we pull down hard into it, and couple that with writing on a red or flat day, right? So obviously if the expected move for the week is 50.64, and on the Monday session we dip into the low 51s, well then that's going to provide us many, many more strikes below the expected move and increases our win rate probability. So let's try and combine these two things together. Now, this is our ROI, this next one. We want to be targeting between 0.5% and 0.75% in weekly premium. This is the sweet spot, guys, that I've derived after trading this strategy for the past 5-6 years. This is where you usually get the best return on investment versus the risk of assignment. Take a look at the options chain right here on Chipotle, right? If we go too close to the stock price, you'll see that yes, the premium is very good, over 1%. If you don't know how I'm doing that in my head, guys, just divide the premium that you have by the strike price, right? So usually for a strike price of $52, your 1% rule would be about 52 cents. Half of that would be about 26 cents, right? Very easy mental math. Let's say we do 0.52 divided by 52, that would be 1%. Half of that, obviously 26 cents, would be 0.5%. That's how you can do some mental math and go through a lot of these strike prices very, very quickly without needing a calculator or anything like that, right? So we want to be targeting between 0.5% and 0.75% in weekly premium, just because anything over that is too close to the current stock price and we run the risk of being assigned. And if we go under that, there's just not enough premium. It's not worth it for us to deploy that capital at these positions. So this is the sweet spot here, guys. We need to try and respect that as best as possible. And lastly, take profit at 90% of the contract value. The beautiful part of this strategy is how passive it is. Usually you get into these trades on a Monday morning or Tuesday morning, and you basically let them run for the entire week and let the time decay just pull all the premium out of the option for you. So you want to be setting a take profit at 90% of the contract value. That way, if you write something on a Monday morning, possibly by Wednesday morning, it's already almost entirely profitable and you can just close out of the contract and just take your gains. Now, in the event we get assigned some of these positions, we are going to write covered calls. So the gist of why we call it the put wheel is because we are going to sell options to get into a stock, to buy the stock, right? And then we're going to be using covered calls to get out of the position, to sell the position back to the market, right? So if we get a sign, we want to be writing covered calls between 0.5% and 1% in weekly premium, almost the same rules as above for the puts. And then we want to be writing at our assigned strike price or one strike higher. The only time that I will be writing one strike higher is in the event, let's say we get assigned on, Chipotle, right? On the Friday session at $50. And then the following Monday, the stock has a great day and gaps up to about $52 on the open. That is when I may choose, instead of writing the $50 covered calls where we got assigned, I may just write the 51s or the 52s because we got that gap up open. So hopefully that makes sense. That is pretty much all of the strategy rules in a nutshell. Now let's dive into last week's top 5 options plays, guys, and you'll see they all pretty much performed exactly as planned. So number one stock we were looking at for last week, guys, was AMD. AMD, starting off the week, was all the way down here, and we were looking for premium, guys, below the $125 level. Now, happy to say that since we opened a little bit lower on the Monday morning session, coming down into the 133 mark, this did free up, guys. Not only did it free up the 125s, but it also freed up the 124s and 123s. It would have been a beautiful trade for anybody who took it, because thereafter, the rest of the week, AMD just pulled away. You would have been able to collect all of that juicy premium, 100% win. So very happy with the way this trade went. The second trade, as part of a semiconductor trade, was NVIDIA. NVIDIA, we were also looking for strikes in the lower portion here, $95 to about $93. Here is where we ended on Friday, and then we filmed the video on the Sunday, and we were looking for a Monday open, which would have given us decent premium below $95. Well, the only strike that was available, guys, was the $95 puts, and they were a very juicy trade because thereafter, NVIDIA just ran up the entire rest of the week. You would have been able to take all of the profits from this strike and put them in your pocket. So another great trade. It didn't provide any lower strikes than 95, but 95 was definitely a juicy buying location, and it did respect our criteria. Now, stock number 2 that we were going to look at, or stock number 3 rather, we were looking at last week was Airbnb. So we filmed this video on the Sunday night, and we were looking for maybe a little bit of a dip on the Monday morning to free up strikes in the $110 range, right? Happy to say, on the Monday session, we did get our dip below 114, and that did free up decent premium here on the $110 strike. So congratulations to all of you who were able to get that trade, because thereafter, Airbnb just ran away the rest of the week. So the 110s, all of that premium would have ended up in your pocket as well. Even the 111s were up for grabs too. Any one of those trades would have performed very nicely. Now, trade number 4 we were looking at was Oxy, OXY Petroleum, right? Occidental Petroleum. And we were looking at it because it was respecting a very beautiful long-term support level down here, this 56 down to roughly $55. We were looking exactly at the $56 strike. So here is the Monday open. There was no trade on the Monday, so I was patient with this one. No premium available at the $56 strike or the Monday session. However, on Tuesday and Wednesday, that trade definitely did open up, and I took it in my own account, which you can publicly see in last week's trading videos. So we took the $56 strike on the Tuesday session, and the rest of the week, it stayed above 56. So we pretty much collected all of the premium in our pockets. Another win there. Very, very nice on that one. Now, the other trade we were looking at, guys, was Visa. And unfortunately, Visa in this location right here, there was really no trade to begin with, right? We were looking for 255 strikes or better. And unfortunately, guys, on the Monday session, we opened higher than Friday, and we never really looked back. The stock did not dip for us to give us an opportunity for that 255. Visa is not a very volatile stock at all. So you really need a decent move down to unlock those strikes. Unfortunately, it didn't move down for us. It just pulled away. So there's no trade on Visa. The idea was good because we were targeting a very large area of support, but unfortunately the market just did not pull back enough to unlock this strike price for it to be worth it for us to take that trade. So unfortunately, no trade on Visa. And the last trade we were looking at here, guys, was Microsoft. Microsoft in this beautiful area of support down here, pretty much all the way, 405 down to about $395, right? So where we were looking at Microsoft was more specifically $395 or below, the lower end of the expected move and the lower end of our large support area down here. Now, on the Monday session, unfortunately, Microsoft started pulling away from us, so it really didn't give us much premium on the $395 strike. for pure short puts. However, I gave 2 strategies for Microsoft, and one of them was put credit spreads. Put credit spreads, anything pretty much below $390 all the way down to about $380. Happy to say, guys, there was some decent opportunities on put credit spreads. It wouldn't have cost you a lot of money to put those trades on, and every single one of those trades, if we would have launched put credit spreads between the $390 and $380 strikes, all of those would have ended up in profits, as Microsoft did pull significantly away from that location throughout the week. So very nice trades overall here, guys. Visa was pretty much the only one that didn't provide an entry, but all the other ones did, and they all ended up in 100% wins. So very happy with the way last week played out. Now, let's jump into this week's top 5 options plays, shall we? And you will see a few of them are recurring because they're still within the context of the opportunity zones that we're looking for. So number 1, once again, is going to be OXY Petroleum. So same locations as before here, guys. Going to be targeting the 56 down to $55 strike. Beautiful location of support. This is 2 years worth of support, and the company's fundamentals are doing fantastic. Once again, this is a stock that Warren Buffett owns as well. So the expected move for OXY this week is 56.53. So let us see, can we find any premium below 56.53, potentially in the 56 to 55 locations? So let's go in the options chain together and see if we can pull that up. So let's go have a look at OXY and determine whether or not we can find some premium at 56 or better. And you can see right here, unfortunately, at the $56 strike, there is just not enough premium. You would need to at least see 28 cents here, guys. How I'm doing that in my head, once again, take the strike price, divide it by 2, and that's the amount of premium you need to see on the bid right here for it to be worth it. That would be your 0.5% rule, right? 0.28 divided by 56 is exactly 0.5%. So not enough premium there yet, which means we need to have a little bit of a dip on OXY. If it does dip into the lower $57 range, or maybe even high 56s like it did exactly last Tuesday, that will unlock the premium on the $56 strike. So I'll be looking for one of these 2 strikes, 56 or 55, guys. For all of these put options, just remember, in the event we have a big red day on a Monday or a Tuesday, which brings us deep down into the $56 location, are we going to stay set in stone right here at 56? No, we have to be dynamic with our strikes. If we come down hard into the $56 level, well, then it stands to argue we have to go even lower. At that point, look for the 55s or even the 54s. So at a first glance, it'll be one of these 3 strikes for me, 56 down to 54, depending on the size of the move on the Monday or Tuesday session. Hopefully that makes sense. Now, stock number 2 is going to be a very good one. This is going to be Google. So Google, contrary to a lot of its other peers in the big tech sector, has not bounced as much as the rest and is still fairly close to the lower end of the support range that was established after the Black Monday sell-off. This green line right here is also the 200-day moving average, and we are ever so slightly above a massive zone of support, which for all intents and purposes starts at about 155 down to about 144. So even if we tried to play Google at the lower end of this range and we get assigned, we know that the bulls are backing us up big time if we dive into the lower areas right here. As of now, though, guys, I really like playing Google at these lower locations right there. The stock is down from the all-time highs right now about 15%. And if we get at the lower end of the range, it will be 17-18% discount from all-time highs. Usually a very good chance to buy Google stock. So let's have a look, guys. The expected move for the week is about $161. So let's go have a look on Google's options chain. Can we find any premium below 161, as preferably as close as possible to that 158 level? So let's pull up Google real quick. And having a look at Google, you can see right here, unfortunately, there is no $161 strike. It trades in $2.50 increments. So the best we can possibly get is maybe the 160s. 162.50, guys, is just too close to the current share price right now, and it's above our expected move. We want to be going below that. So I will be targeting one of these 2 strikes here, guys. 160s or 157.5s. We need to see at least 80 cents on the bid for this trade to be worth it for us. So it stands to argue we need a little bit of a dip on Google. If they dip on the Monday or Tuesday session here, guys, down into the lower 163s, 162s, that will probably free up the 160s and maybe even the 157.5s. And it stands to argue as well, if Google has a really bad day on a Monday or Tuesday and gaps below our expected move, down into maybe the 159, 158, big sell-off, right? Well, then we have to go even lower, guys. Think 155 or maybe even the 152.50. So at a first glance, I like these two strikes, but if we get an outsized move to the downside, we know markets have been volatile recently. We want to be going as low as possible, as close as possible to this big zone of support, which starts at 155. So hopefully that makes sense on Google. Now, the next trade we're going to be looking at is Airbnb. Airbnb, once again, on our watch list because it is once again very close to a huge area of support, which starts for all intents and purposes at 110 all the way down to 100. I really like this zone for picking up Airbnb, guys, and the valuation down here is quite fair. So moving on into it, the expected move for Airbnb for the week is 113.15. Let's go have a look on the options chain. Can we find some premium below the 113 mark? So let's have a look together. So Airbnb, 113s are paying about 57 cents. This does respect our 0.5% rule. As a matter of fact, this is almost exactly 0.5%, right? 2 times 57 is 114. So we know we're getting paid adequately for that strike. However, I want to be a little bit greedy, guys. I want to get as close as possible here to maybe the 111, 110 region. So that being said, if Airbnb has a little bit of a dip Monday and Tuesday morning, bringing us down into maybe the 115s, 114s, that will definitely free up these lower strikes right here, 112, 111, and 110. These three strikes I like a lot better than the 113s. The 113s do respect our criteria, right? They are below the expected move, and they are towards an area of support, but I want to be greedy, especially since we're expecting a pullback possibly in the SPY and QQQ. I want to be getting the best pricing possible for these options. So at a first glance, 112 down to 110, as low as we can go while still getting our 0.5%. And it stands to argue as well, guys, if Airbnb on a Monday or Tuesday session has a big red day, right? Minus 4 or 5%, and we come down already into maybe the 111, 110 region, right? Big red day down about 110 on a Monday or Tuesday. Well, then obviously we need to be going even lower, guys, right? Think the 108, 107, 106. As low as possible into this wide area of support, 100 down to about 110, right? That is how we master this strategy, guys, by being dynamic with our strikes and reacting to the size of the move to the downside and then going even lower, right? Keep in mind, if we open very, very low right here, your expected move, you might get some mean reversion. That's why when we have these big gap down opens into oversold conditions, we can get a bounce fairly quickly back to the expected move. And you can sometimes realize all that profit in one single day of trading. So looking very good on Airbnb. And then next, we have a pair of semiconductor trades, which once again will be AMD and NVIDIA. So for AMD, at a first glance, guys, I really like AMD at this lower box of support, this green box right here, 142 down to about 128. You can see it was previous 52-week high resistance right there, a little bit of congestion, support for the markets, and big support for the markets as of the recent couple weeks of trading, establishing a very firm base of support below us right now. So what we're going to be looking for on AMD is a little bit of a pullback, right? So the expected move for the week is 142.42. So let us see, can we find some premium even lower than that? I want to be targeting as close as possible, guys, 139 to 137, right? Where we start coming into this big area of congestion. So let's pull up AMD's options chain and see if we can find any premium down below there. So the expected move, I'll remind you, 142.42. So let's go shopping below that, shall we? So as you can see right here, right, the premium starts to get fair at about the 141, 140. This starts to respect our minimum ROI criteria and is below the expected move of 142. But I want to be getting a little bit more greedy on AMD, guys. If we have a red day on a Monday or Tuesday, maybe bringing us back down into the 145, 144 region, well, that will most likely free up even better strikes. Think 138, 137, 136. So the strikes that I'll be looking for on AMD this week, guys, is as close as to 138 as possible. Think of these following strikes: 139, 138, 137, as low as we can go while still getting our premium in the stock market right now. So that's the type of trade I'm looking at on AMD. I do not want to chase it too closely up here, going for the 143s, 142s, because you guys know it just takes one red day, and sometimes AMD can have a 5-6% pullback, and you'd already be in the money, right? So be quite cautious on this one. That's why I'm going to be fairly conservative. And the second stock as part of the semiconductor group is going to be NVIDIA. So NVIDIA's price action has been phenomenal, of course, over the past couple of days, but we may just be waiting for a little bit of a pullback. pullback. We've had a beautiful rally here, but may just be time, guys, for our overbought conditions, not only on NVIDIA, but also on the SPY and the QQQs. So going to be waiting for a pullback. The expected move on NVIDIA right now is 118.59, all the way up here. Yes, it is in one of our smaller support areas, 119 to 115, but you guys know the problem with this trade, right? NVIDIA is known to move a lot sometimes. It just takes one big red day or two red days in a row to put us below the expected move and down below in the 115 range, right? So that is the type of move that I'm going to be waiting for this week. If we can get a pullback below the expected move, possibly 118, 117, should free up even better strikes, guys. I want to be getting as close as possible to 111, 110. Call me too conservative, call me too cautious, but that's just the way that I want to play semiconductors because we know they've been very, very volatile as of lately. So let's go have a look. Can we find any premium below the expected move of 118.59, possibly closer to the 110 location? Well, as you can see right here, guys, there's not much premium on those strikes right now. For the 0.5% rule, you would need to get the 116s. Anything under that doesn't have enough premium. So it stands to argue we need to wait for a little bit of a dip on NVIDIA. If NVIDIA has a dip, once again, as I said, 118, 117, 116 at the early portion of the week, that's not too much, guys. That would be a drop of about 5%. You guys know NVIDIA can sometimes drop 5% in a single morning, right? So if we do get a drop like that, I'll be looking for these strikes, guys, right? 113 all the way up to about 110. Those are the strikes I'll be looking at on NVIDIA for this week. Doing it very, very conservatively, but we need to be careful, especially after 9-10 days of rally in a row with the indexes as well. And the last trade that I have for you guys this week is going to be Chipotle. So Chipotle has been having a very stable area of support at these lower levels. That is where they bottomed out after their earnings day. This is also where they bottomed out on the Black Monday event when the Japanese carry trade unraveled and the markets went down 5-6% that day. And this is also where they found a bottom after the CEO swap news of Brian Nichols, the former Chipotle CEO, moving over to Starbucks. So you can see very volatile, 3 back-to-back almost extremely volatile events, and Chipotle was unable to close below the $50 mark. So it stands to argue there is a lot of bulls sitting here to buy the dip. So that being said, Chipotle right now, $50 range, looks very nice. Previous support area too. So the expected move for the week is 50.64. So let's see, can we get any premium below 50.64, as close as possible to $50 or maybe even 49.5. Let's pull up Chipotle's options chain right now and we'll go through that list. So Chipotle, as you can see right now, they are barely paying 0.5%, right? You can try to set a limit order right here at 25 to get filled, but for all intents and purposes right now, the bid is only 20 cents. So we need Chipotle to come slightly down on the Monday or Tuesday session to free up the $50 strike. So at a first glance, I really like these 50s, but if Chipotle has an outsized move to the downside on Monday or Tuesday, bringing us into maybe the lower 52s, high 51s, mid 51s, that is probably going to free up even better strikes. Think maybe the 49.50s or the 49s. So I like any one of these 3 strikes, guys, 50 to 49. And obviously, for some reason, guys, Chipotle has a minus 6-7% day on a Monday or Tuesday, bringing us all the way down here, right? 49, 48 already. Well, obviously, we're not going to be writing the 49s, right? Then we have to go even lower. Think 46 or 45. So always adjust your targets depending on the size of that move, right? So hopefully that makes sense. That was all the top 5 options plays that I had for you guys over the course of this week. Now let's jump through a bunch of bonus plays that I always keep on a watch list on the side in the event they come into the locations that we are looking for, right? So that top 5 list is really the best, highest quality setups right now because they're almost ready. But here's a bunch of bonus plays that I keep on the back burner. If ever they come into our locations, I am ready to strike while the iron is hot. So number 1 is going to be UPS. UPS, right? Big area of support down here, talking about the 125 all the way down to roughly 120. It was huge support back in 2018 and 2019, and we're pulling into that area right away. daily almost oversold conditions. We're now bouncing out of it. If I can find UPS having a little bit of a dip right here, I would be very tempted to be riding the 125 down to about 122 strikes. Moving on to Micron right now. Micron is also a semiconductor play that I like, but it's ran a lot since the bottom. So in the event we get a little bit of a retest this week, retesting under $100, think 99, 98, I'll be looking for some short puts in the mid 90s, think 95 to about $90. I like this support area on Micron. It's your previous all-time highs. It should be acting as support once more in the event the bulls have to pull back a little bit and recover before a future move. And the next play that we're going to be looking at, guys, is Oracle. Oracle as well has bounced significantly from this location. In the event we start pulling back on the markets here, guys, and we can find Oracle trading in the mid or low 130s, then it probably frees up strikes like the $128 strike. 128, 127, I love on this company, prior all-time high. Resistance should be newfound support for the company, so I like Oracle down there. Another trade I'm looking at constantly, guys, is Expedia. So Expedia had a great gap up after their earnings. In the event we start retesting this green box is a great location. Big prior resistance for the stock, huge current support. So if Expedia pulls back into maybe the mid 120s, I'll be looking for strikes. Think 121, 120, 118 as best as I can get, right? Always keep this one on the back burner. The next one I've been looking at recently, guys, is Elf Beauty. Elf Beauty has come down significantly here over the last 1 month of trading, and we're now coming into a big area of support. Previous resistance for the markets, congestion, support, and now support again. So I love this location right here, 150 down to about 135, but I want to be greedy on Elf Beauty. We know it's part of the consumer discretionary trade, so may not be favorable right now. So if we get big dips on a Monday or Tuesday, guys, I'm always looking for premium on Elf Beauty, but lower than 140. Think 140 down to 135. I always like trading options down there. Another stock we're going to look at, guys, is Amazon. Amazon has run a lot. We're waiting for the daily higher lows. The reason why it's not on the top 5 options plays for this week, guys, is just because it's very far off of its most recent level of support down there. And we're kind of in a middle ground right now, right? Big area of resistance above us. And the support level is considerably below at around the 160, 158. So Amazon, I will be waiting for a pullback. And if they do grace us with a pullback, guys, under 170, I'll be looking for 167 and 165 strikes, the lower end of this region right here. So hopefully that makes sense on Amazon. Then we have a bunch of other cheaper ones that I'm looking at too. Robinhood. Robinhood's had a tremendous bounce. They had fantastic earnings as well, but similar to the rest of the market, I am not chasing up here. If we get a pullback, guys, I'm probably going to be targeting the lower $17 range. All of this support right here could be a juicy swing trade opportunity for some short puts, but now it's just a little bit too extended. Another one that's come down significantly, guys, is CELH. Another cheap one, and CELH is coming into a big area of support below us. Think 37 down to about 31. Huge prior resistance for the markets. Should be current support for the markets as well. But I want to be greedy on this one, guys. I want to be getting in the mid 30s, right? So think maybe 35 all the way down to roughly $31. So we're not there yet, but one extra leg down of a push could push us into that territory. And the valuation down there is excessively cheap for this company with high growth. So I like CLH in down there. Despite their big sell-off, this is where we start to find true value in this company and weekly almost oversold conditions as well. Now, another one I'll be looking at, guys, is Enphase. Enphase, part of our solar play. We know the sector's been out of favor as of recently, but still a big shelf of support is forming down here towards the lower $100 range. That's been support now almost for pretty much an entire year at this point. So whenever I see Enphase on a big dip on a Monday or Tuesday morning, I always look, is there premium available at 100 down to about $95? This is the area that I always like trading Enphase in, just because of how substantial this support level is. And the company, we covered their earnings, they're finally starting to transition out of cyclicality and back to a little bit of demand growth. So I like them there. Another one, guys, that's going to be on my list for this week is Baidu. Take a look at Baidu. They are the Google of China. Extremely solid fundamentals, huge area of support stemming back. Guys, this is 15 years worth of support, right? So it cannot be ignored. And Baidu is in a very nice location. I'm tempted to play it. The only reason I didn't include it in the top 5 options plays is because it's part of the China trade. And I know that a lot of people are very hesitant to take trades like this. But for all of you who understand the risks involved and are willing to play, I like this one, guys. Mid to low 80s is where I'm going to be looking to play strikes in the next few weeks, just because we're in such a juicy area of support and the fundamentals of this business are absolutely fantastic. Now, before last, also Microsoft. The reason Microsoft is not in this week's top 5 is because it's ran a little bit away from our support zone right here at 402 down to about 390. But if the markets have a pullback and Microsoft pulls back here, think maybe 410, that's when it's going to be freeing up strikes 405 down to about $400. So I love Microsoft down here, but we need a little bit of a pullback for that to be worth it for us. And the last one that I have on my radar, guys, is going to be Caesars Entertainment. Also, guys, this is pretty much at this point, right? 6-7 years worth of support in the lower $30 range. So Caesars, whenever they have a bad Monday or Tuesday session, bringing us down below into the low 35s, high 34s. I always look for this location right here, guys. 34 down to about $33. I love it. It's the lower end of a roughly 6 years worth of support level. So I love those mid to lower $30 strikes on Caesars Entertainment. So that's pretty much everything we had for you guys today in the video. Hopefully you appreciated today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new, guys. We do these videos every Sunday evening to prep for the week. And then throughout the week, Monday to Friday, we do our daily market recaps where I show the results of our live trades using this strategy. And as usual, guys, if you have any questions at all on the strategy, on my strike selection, stock selection, or if you have names that are potentially interested in trading, but you're not sure, just let me know down below in the comments, guys, and I'll be happy to answer you, usually within the first 24 hours. So take care. Have a great week of trading, guys. Peace.